Good morning, investors. Welcome back to your daily pre market report, where we decode global cues, institutional activities, commodities, currencies, and technical levels. Everything you need before the stock market opens in India. Today's market setup looks constructively positive, supported by strong institutional buying, a positive gift nifty, and a stable global markets. However, at higher levels, selectivity will be the key. So stay with me till the end as we break down what to expect, where to be cautious, and how to plan your trades for today. Let us first start with the most important driver of the market, that is institutional flow. On Friday, 2nd January, foreign institutional investors were net buyers of 554 crores. Domestic institutional investors were also net buyers at 534 crores. This is a very healthy sign for the market. When both DIIs and FIIs buy together, it clearly indicates confidence in Indian equities at current levels. FII's buying shows global investors are comfortable with India's valuation, where DII buying confirms domestic strength and long term conviction. Such data generally limits downside risk and provides a strong base for the market, especially near support levels. Now, let's look at how global markets performed on Friday. Coming to the US markets, Nasdaq closed at 23,222, down by 19 points. This decline is not alarming. It reflects mild profit booking in tech stocks, especially after a strong rally. There is a no panic selling visible. S&P 500 ended at 6,858, up by 12.97 points. This shows that broader markets remain strong, indicating continued risk appetite globally. Dow Jones Futures are currently trading at 48,401, up by 17 points. This signals a positive start for US markets, which usually supports Asian markets, including India. Overall, global interpretation: the global markets are stable, not overheated. This kind of environment is favorable for emerging markets like India, especially when institutional flows are positive. Coming to the gift nifty, which gives us a clear pre-opening indication. Gift nifty is trading at 26,535. It is up by 67 points. This suggests that Indian markets are likely to open on a positive note today. However, remember one thing: a positive opening does not mean a straight line rally. At higher levels, profit booking and volatility are normal. So, disciplined trading is very important. Now, let's check the currency market. USD INR is currently trading at 90.19. A slightly stronger dollar generally supports IT exporters, creates mild pressure on import dependent sectors, keeps RBI closely watchful. So, at this level, USD INR is not alarming, but traders should remain cautious on currency sensitive stocks. Now, coming to the crude oil and Brent crude. Crude oil is trading at $57.53, up by 0.37%. Brent crude 61.02, up by 0.45%. Crude prices moving up indicate tight supply concerns and geopolitical risk. So, it's a positive for upstream oil companies, slightly negative for aviation and logistics. Inflation impact needs monitoring if crude sustains above these levels. Coming to the gold, a safe haven signal. Gold is trading at $4401, up by 1.59%. This indicates safe haven buying, usually triggered by global uncertainty, geopolitical tension, currency volatility. So, gold strength suggests risk management mode globally, not fear. Now, coming to silver. On Friday, silver prices in India remained in consolidation, trading near 2,38,900 per kg. Silver is currently moving sideways, which is actually a healthy sign. So, important reminder: any asset that moves in a straight line is dangerous. Silver consolidation suggests avoid heavy leverage. Physical silver holders for the long term remain safe, but traders must stay disciplined. Let us now quickly look at the key Indian ADRs which often influence opening sentiment. Infosys ADR is positive, indicates strength in the IT space. Infosys may open firm today. Now coming to the HDFC Bank ADR, it's slightly weak. Private banks may see a cautious start. ICICI Bank ADR, it is positive, shows relative strength in banking. And coming to the Wipro ADR, which is again positive, adds support to IT stocks. So overall, IT stocks relatively stronger compared to banks in early trade. Now, let's talk about an important global development, Venezuela. Concerns around Venezuela's oil supply and geopolitical tensions are once again impacting global crude prices. So, what's impact on today's market? Commodities. Oil remains support stocks positive for energy and oil producers. Slightly pressure on oil consuming sectors like aviation. So volatility, mild increase possible. This is not a panic situation, but definitely something traders should keep in their radar. Coming to the technical levels, very important for today. Nifty 50 levels, support at 26,400, 26,320. Resistance 26,600, 26,720. Above 26,600, momentum may accelerate. Below 26,400, short-term caution advised. And the Bank Nifty levels, support at 56,200, 56,000. Resistance 56,700 and 57,000. So, Bank Nifty will be the deciding factor for today's trend. Watch ICICI Bank and HDFC Bank closely. So, to summarize, institutional buying is strong, global cues are supportive, GIFT Nifty indicates a positive opening, commodities are firm. But always remember, markets at higher levels reward discipline, not aggression. So today's approach should be trade with the trend, protect capital, avoid overtrading and stay stock specific. So that's all for today's pre-market report. If you found this analysis useful, like, share and subscribe to the channel for daily market insights. I'll see you again for the post-market report after the market. This is Akash Bacha, SEBI-Registered Research Analyst and founder at Wealth Origin. Trade safe, stay disciplined. See you after market hours again. Jai Hind.